tensions in Eastern Europe between Ukraine and Russia have propelled gold to the highest level since June. We're here to discuss what's next for gold and the equity markets in the U.S. with Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Chris, welcome back to the show. It's your first time back on Kitco since the start of the year. Welcome back.
Yeah, thanks for having me, David. Always a pleasure.
Always a pleasure to have you back. And Chris, 2022 has not been kind to equities so far. Gold has done relatively well. It's skyrocketed over the last couple of weeks. We've breached $1,900 today on Monday. We're just below $1,900, but that critical threshold has been breached in the last couple of weeks. Chris, what's next for us?
Sure. Well, I think we're coming into a pretty major super cycle in precious metals. I think we actually started it back in 2019. And this is about a 5-year cycle for gold. And, you know, it has been a very tough year for equities. We've had a massive bull market. I think things are getting a little long in the teeth in terms of the equity side. And when a stock market gets to the late stages, this is when we see commodities tend to come to life. And we're seeing that. We're seeing inflation. We're seeing rates starting to go up. We're seeing commodities start to go up. And that is a really good sign for precious metals. And when you look at gold, it's had a very strong rally over the past month, complete opposite of what the equities markets have done. And we're starting to see signs of life in terms of what the leverage plays around gold are doing. We're starting to see miners in general come to life, including base metal miners are breaking to new highs. Copper miners have started a new uptrend from a big bull flag. Gold miners are the next one to break and pop, and silver is lagging a little bit, but silver miners typically lag, but they play catch up real quick. So all these things, we want to see the equities for precious metals come to life, because that usually tells us the physical metals are going to follow suit. And everything is setting up for, I think, a perfect storm, a nice big rally across the board in gold, silver, and miners. So it's pretty exciting times the last month. Big turning point.
We're going to get to your price projections in just a minute. Now, before we continue, let the audience participate. If you're watching this, comment below on where you think the gold price is headed by the end of the year and in the next couple of years. Now, Chris, before we get to your projections, let's talk about what's going on right now. Geopolitical tensions are flaring in Eastern Europe. Some people I've spoken to have said that geopolitical risks have, in the short term, in the past, spiked gold up higher, but only in the short term. They said that geopolitical tensions are not a persistent force for higher gold prices. In other words, you might get a spike in the short term, but it doesn't persist higher unless you have other macro forces going on. Is that true?
I believe so. I think news, doesn't matter what it is, political, stock news, geopolitical things, it is news, and it does move commodities, and it can be short-lived. But we're definitely seeing, that type of news, which is actually good for metals. I think the underlying trend of commodities coming to life are actually the big driving force. And war, Ukraine, all this, these types of things are going to help boost it. But it's really not going to, I think, hold the prices up. I think it's just kind of get more attention to the precious metal sector, even the crude oil sector, and it just brings more attention to it. But again, anything news-based, if you get a big move based on a news event, it usually gives back those gains pretty quickly. So yeah, I don't take too much news as a real indication of trend or long-term price action for sure.
So let's talk about that. Are you saying that, I'm not suggesting one way or the other, but are you saying that this rally that we're seeing in gold is short-lived?
It's depending on your time frame. So I have a feeling we're going to see precious metals come to life here, and they might do really well for a few months, 2, 3, 4 months. If the U.S. equities market does roll over and go into a much deeper correction, I think we're going to see metals and miners kind of pause and pull back a little bit from there. And then when the stock market finally puts in some type of bottom, I think we're going to see precious metals and miners really take off to the upside. Overall, long term, we are in a major super cycle for gold. I think there's about a 5-year window here where we could see prices really rally. Yeah. But right now, I think we're about to see a very strong move in precious metals for 2 or 3 months. It doesn't mean it's going to go straight up from here and never look back. It might be a great opportunity to lock in some profits. And if the stock market rolls over, there'll be an opportunity to get back in, I think, when gold flags sideways or pulls back a little bit after that.
Let's talk about this 5-year window of price appreciation. I believe you have a cycle chart to show us. So let's talk about the key targets over the next 5 years that you're watching out for.
Yeah. So this was I did this chart in a presentation back in October of 2020, and gold had breached 2000. It started to pull back. And I went into great detail about how there's a blend of this purple line here is a blend of different time cycles. And when you blend them together, it tells you the overall bias. And you're generally looking for cycle lows and cycle highs. And the scenario that set up back in October 2020 was actually very, very similar in terms of the environment, the cycles, to what happened in the 2008, 2009 crisis. And what's unfolding here is very similar. And I had talked about how we're looking at 2022 as the year for gold to put in a bottom. It's probably going to trade sideways and down, which is exactly what it's done along with miners. And here we are into this window where cycles should come to life and we could see a really big move to the upside. So it's really exciting that here we are, 2.5 years or a year and a half later, we're right back into this scenario where finally the cycles, I think, are playing out. The stock market is starting to get very toppy. We're seeing huge money flow out of the large caps. And that is a really good sign for the physical gold market to move higher, along with precious metals and miners that are coming to life. They will become a leader, and they actually have become a leading sector in the past couple of weeks. They're one of the top sectors, and I think they're just getting started to move higher. So this is going back a year and a half, and it's just playing out. So these are very big cycles, and it goes to show how much upside potential there is from this point here.
You know what's interesting, just looking at this chart, it just occurred to me that back in 2008, we had a dip in gold, and then it continued rallying up to the then high in 2011. But you know what? Equities also rallied a lot back then as well. We had a trough in 2009. That was a great financial crisis, and then everything just recovered. So it's not uncommon, I would say, for gold and stocks to rally together in a multi-year cycle, right? That could potentially happen again this time, or is it different?
It totally could. It very much could. In fact, I did. I don't have the chart on me here, but in the same video, I showed the SP 500 and the cycle analysis, and it showed a major cycle low for stocks, October of 2022. So for all we know, we're going to see the stock market cracked. We're going to see gold and commodities continue to be a very defensive play. And when the stock market finally hits a major bottom, works itself out later this year, I think we could see a very big rally in equities. And I think there's going to be a lot of fear. And we're going to see a very similar scenario to 2009, where gold stocks rally, gold rallies because people are very nervous, but we see the equities market rally as well. So, I mean, we're really setting up, I think, for a very similar type of move in this market. And this is going to be a really wild year. Last year was a pretty dormant year when it comes to growth stocks. Everything traded sideways or lower. The indexes moved up, just the big, large caps. But overall, it was a fairly dormant year. I think 2022 is going to be a big year because precious metals are going to have a big run. Commodities and commodity stocks are going to do well. I think the stock market's going to have some huge percentage swings up and down. So this is going to be a major year of huge volatility across the board, huge opportunity. So it's going to be pretty exciting.
If you're a trader, huge volatility for a trader. I guess if you're an investor, some people don't like that volatility, Chris. But for technical traders like yourself, definitely a lot of opportunities. All right, let's talk about your price targets. So over the next 5 years, where are you expecting gold to go?
Yeah, so over the next 5 years, I expect in the next year or so, we're going to see $2,700 gold. If I actually just go back to the live chart here, you and I have talked about this a few times, just based on the momentum from this multi-year base, this rally to the upside, we can get a couple upside targets. The most conservative target is using Fibonacci extension from these levels, from where it started this strong run, created a bull flag. And if we were to just look higher to where that's going, we're looking at 2,600. If we wanted to go to the more extreme level, we could go down here, and that pulls us up to that 2,700. So that's where I think we could see gold pop very quickly. Over the next 12 months, we could see it scream up to 2,700. And I think we'll see silver do very well, see miners do well. When you look out longer term, I think we're looking over the next 4 or 5 years, I think we could see gold work its way up to 3,400, and then potentially, depending how things unfold in the economy in the world, it could have a huge blow off move where it spikes up to like 7,400, which is kind of where the momentum will most likely stall out, have a sharp reversal. But that's looking way out. When we look at the price of gold here, you can see that we've got this multi-year, I mean, a 12-year rally. And really, we're just starting that again. And you could argue we started here in 2015, 2016.
Sure.
So we still have a few more years left of this moving up. And some of the biggest moves in any trend happen right near the end. At the last percent, the last 10% of a trend, it's where price goes parabolic or it drops like a rock. And that's where we could get that blow off move in precious metals.
Let's take a look at the bull rally cycle that we saw in the 2000s. So I believe gold troughed in 2005, if I remember my gold price history correctly, or somewhere around then. What was it trading around the early mid-2000s, 2004, 2005?
Gold was down here around $300 roughly.
$300, okay? And cycle peak 2011, that's $2,000, right?
Yep.
Okay. So that's 6 times, 6.5 times.
Yeah.
Yeah. It's a 6.5 times rally in how many years? 6 years?
No, that was from about 2000 all the way to 2011.
10 years.
You're about a 10, 11-year window.
So your prediction of $7,400 in 5 years, that's about a 3.5 times move in 5 years. So that's exactly, So we're talking about last time, 6.5 time move in 10 years. Now we're talking about a 3 times move in 5 years. Yeah, that sounds
and if you go off this low, roughly around $1,000, and you go to 7,400, you're looking at 6 times the move, more or less, from a rough level. So it's a very, very similar scenario that's kind of playing out here, which is really exciting. I mean, that's why a lot of us follow gold. It's why a lot of us accumulate physical gold, and it's going to be really interesting when we get to these lofty prices, what the spread is on owning physical gold versus, the spot price. And because it's going to get pretty gnarly. It's going to be great for anyone who's got physical metals stored away, because you're going to get a huge premium on top of selling it on the price that it's valued at. You're going to be able to get a ton more. So that's one of the reasons why I think you really need physical, is because there's this extra aspect of, you can't, even though it's a price tie, you still can't get it, right? And people are willing to pay ridiculous prices to get their hands on it because they want it. So there's a couple of ways to really profit, I think, from physical when things get really haywire.
Leave that chart there. Don't move it. Okay, let's take a look at what happened between 2012 and 2018. I've asked this to a lot of traders. I think I've asked you this a couple of times as well. I don't mean to beat a dead horse, but I just want to ask you whether or not we can see the exact same pattern play out during those years. Remember, after 2011, we had a multi-year consolidation period when gold just underperformed pretty much everything. So what's different now? Could that happen now, or is that gone? That's done.
I mean, it could always happen. The market is going to do what it's going to do. This scenario is the market has just had a huge correction. I think we've gone through the whole kind of economic cycle where commodities, in 2011 were very high priced. In fact, I did this chart in that same presentation. If you look over here in 2020, stocks were overvalued. It was the tech bubble. Everything was in a rally except for commodities. That's when the stock market topped out and we saw gold skyrocket. Well, we're back down at these levels here where everything is in a bubble except for commodities. And commodities obviously have just started to come to life with inflation and all this stuff in the last year. So we're down in this lower phase. Gold has reset. It's had a multi-year correction. And we're just starting this multi-year super cycle where everyone's going to go from homes and stocks back into, we're going to see commodities, and people are going to panic and liquidate and go to bonds or whatever they're going to go to as a safe haven. But we're really just starting a massive cycle in valuations where everybody now thinks stocks are overvalued. So there's a pretty interesting scenario. So to me, I think this market has cleansed itself. It's reset. It's starting a new major trend. But for sure, this market could break down from where it is, break below 1,600 or so, and come all the way back down and trade in this range. I mean, the market's going to do what it's going to do. And you just need to be prepared that if it starts to break these lows, you probably don't want to be holding it if you're a short-term trader, short-term trader. But if you're a long-term investor, we're still in a major super cycle to the upside. I think we still have 5 years left. It just might not go anywhere or go higher for a couple more years as it works out potentially a longer correction through here. So to me, this market has been it's been cleansed, it's re-energized, and it's about to take off.
Well, let me ask you this, Chris. What does gold have to do to convince you that this momentum upwards will not stall? And conversely, what does it have to do to make you think, okay, maybe we're seeing a repeat of 2012, 2018 again?
Right. So ideally, let me drop down to a shorter time frame. If we go to like a weekly chart here, we can look at some shorter term resistance areas on this chart. And more or less, we've already broken this kind of standout high, which is great. And now we've got this other significant standout high, which is around 1920. And if we were to draw a line just across this high, this is a pretty significant turning point. We've got a major, this is a weekly chart, so we've got several weeks that kind of clustered up here, plus over here, and then we traded right through it a bunch of times, and we had a whole bunch. We had about 5 or 6 weeks that it hit that level and found support. So this is going to be a really big turning level where, to me, this base right here is equivalent. It's the same scenario of this base right here.
See.
It's just cleansing itself. The markets are fractal. So the same pattern that you see on a monthly chart, happens on a 1 minute chart. So we're resetting. This market has just put in a base and it's on the verge of breaking above it. And when it gets around 1920, holds above there and starts to move higher, that to me is the start of a new uptrend in gold. Mm-hmm. Gold miners should be really popping and breaking out. So will silver miners most likely. And I want to see the silver or the gold miners break out as well. They should be a confirming tool that, money's now, they're believing gold's going higher and they're throwing their money into the leverage plays, which are gold miners, to try and get the most out of the move in gold. So those are the two things I'm looking for.
All right, Chris, I want to talk about the equity markets before we wrap up. Sure. You had stated that, let's talk about the broad markets first, and then we'll drill down to specific sectors. So the broad markets, how are you feeling right now? You had said earlier that it's possible for gold and stocks to rally together, but you've also stated that maybe valuations are a bit of a problem right now. So how do you resolve this dichotomy?
Right. So the valuation side, I feel like they're overvalued, but I don't trade. I'm a technical trader, so I really don't care too much about the evaluation. It's just a warning flag saying, we're pretty lofty pricing in terms of equities. When we look at the chart here, we're seeing a pretty good correction in the SP 500. It's had a terrible January. I think it was one of the worst Januaries in like 30 or 40 years in terms of price. And I think right now, the market is still unfavorable. We closed out of our equities positions, all of our sectors a little while ago. Market is down another 7 or 8% from there, where the NASDAQ is. And this market is trying to find support. It is very close to putting in another rally and starting here. But if it breaks from this level, I think we could see a very big correction to the downside. And if we do see this sell off, we need to keep our eye on what gold and miners are doing, because they could get pulled down temporarily on this if it's panic selling. We saw the big panic selling a few weeks ago. It pulled gold and silver and miners down with it, only for like 2 or 3 days. And once the panic relieved, miners and gold took off again. And that's the scenario. When there's panic in the streets, it tends to pull everything down with it, even the defensive plays. But as soon as the panic kind of alleviates, the stock market can still sell off, but metals and miners can really pop and rally. And so I think they're naturally going to want to go higher, even if the equities go sideways. I think we're in the scenario where even when the market is rallying, the stock market is rallying, we're going to actually see gold, silver, and miners start to rally as well. I think they're all starting to move up in sync together. I think gold and potentially miners are going to be a top performer, or like a commodity index fund, like DBC, which is like a general commodity basket. I think commodities are doing exceptionally well. They're going to hold up. I don't think their price is going to fall anytime soon. And I mean, when you take a look at it, I have actually got the market broken up into micro caps, into small, mid, the Dow, SP 500, NASDAQ. And we've got different types of bond plays. And then you can go to international markets. And down here on this daily chart, when it goes red, this is when the US stock market is not favorable. We don't want to be in US stocks. And so that happened a little while ago. And for example, if we were to look for a bond that has a negative correlation that is in a bullish phase, we could look at this bond fund. And when we get out of US equities, we can move into a bond fund that can buck the trend. So there's going to be some other unique plays that you're kind of betting against the market. And the other cool play is you can go international, get out of North America market. You can move into a top performing country that has got a low correlation to the US stock market. So if the stock market goes up, it doesn't affect it. And you want to find something that's in a bullish phase that is a top performing. And you can see from these signals, there's some huge moves in Latin America, Brazil, all kinds of different plays. So there's going to be some very interesting plays. You're going to have to get unique this year in order, I think, to pull money out of the market, because I don't think equities in general, US equities, are going to do well. I think they're going to be a much more of a choppy topping phase that could be really tough to make money. It might not go anywhere really, but there will be some great plays, and precious metals and miners, I think, are going to become one of those leading sectors that you want to be part of.
Okay, so we did say that last year, but hopefully this year, finally, it's going to happen. Chris.
Yeah. Well, the nice thing about technicals, though, even though we did say last year would be, we were looking for them to break out, they never did break out in rallies. So that's the nice thing about following technicals, is it doesn't matter if it does it or not. When it does, we'll be there, and it's finally looking like it's about to happen. So that's the exciting part of following analysis versus, predicting and trading off of, what your hopes are.
I'm going to give you a scenario. I'm not saying this will happen, but let's suppose the equity markets crash. Now, you just said that there's going to be choppy action sideways. So you didn't call for a crash, let's be clear. But let's suppose it does crash by the order of 25, 30%. I'm talking about the S&P 500, like we saw in March 2020. What's going to happen to the gold miners? Suppose in that scenario, gold stays elevated or even rallies, strength into weakness on the equities. What do we see the gold miners do in that case?
Right. So we need to see how this market sells off. If it goes into one of these type of sell-offs like we saw in 2020, where it is a panic phase and it goes straight down, it is going to pull gold. It's going to pull miners down most likely. They'll probably hold up the best and do okay compared to other indexes, but they'll probably get sold off. Now, if the market chops sideways and kind of has a slow grind lower, that's the perfect scenario for precious metals, because there isn't the panic selling, the forced liquidation, margin calls.
And gold miners would do well in that case?
I think they do exceptionally well. Just like we've seen, the equities market pull back, we've seen the energy sector skyrocket higher. And I think the same scenario can happen, where gold miners will take the lead and the stock market will sell off and be out of favor. And we've seen this happen before, and I think it's going to happen again. So.
Final question, Chris, and I'll let you go. The DXY, the dollar index, has been steadily grinding higher over the last couple of weeks since the beginning of February. We saw that happening as tensions in Ukraine and Russia flared up. Now, I wonder why gold and the dollar have been rallying in tandem together. Don't we usually see an inverse relationship?
Typically we do, but I mean, we can still see the dollar and precious metals rally together. They're both seen to me as a very defensive play, a kind of a global asset. When people get nervous, doesn't matter where they are in the world, they'll liquidate and they tend to move to the US dollar. And we see this happen all the time. The 2009, 2008 crisis, we saw the US dollar rocket higher. We also saw precious metals move higher. We've seen it happen over and over again. And we've seen the dollar move up. We've seen gold, recently. We're seeing gold move up, and we're seeing the dollar start to move up. I think they're going to be considered still a defensive play. And if we see more panic selling in the stock market, I think the dollar is going to move up, and we're going to see precious metals move up as well. They can move together. It's happened many times in the past. It just comes down to the mindset of the market on how it moves. Is it panic? Is it based on, an event? Or is it just a constant mindset of people that are nervous, becoming more nervous to hold equities, and they're just looking for the leading asset? What's the best sector now, which right now is still energy, and it's gold and silver miners. So they're going to be focusing on where the money's flowing, and they're going to go there. And I think we could see them move up in sync together.
Makes sense. All right. Thank you so much, Chris. Thank you for your analysis. Look forward to having you back next time.
Yeah, thanks for having me, David. Always a pleasure.
Thank you for watching Kitco News. Don't forget to subscribe to our YouTube channel. I'm David Lin.